Hi everyone, Christina Steeran here with Bullseye Investments, where we help busy professionals invest in their future when time is scarce. And today I want to talk about 3 of the biggest risks when investing in a multifamily syndication so that you know what the risks are and you know what to look out for. We're going to do a countdown today, starting with 3, going all the way to what we consider here at Bullseye Investments to be the biggest risk you take as an investor, as a passive investor. So let's get started. Number 3, a natural disaster or a global catastrophe. As we've seen in the past year and a half, the COVID-19 pandemic shut the world down and everything suffered. This is something that is always going to be a risk, and it's a pretty big risk that something somewhere could potentially happen. Now, while insurance helps to cover a lot of this, that doesn't mean that your investment isn't going to fall on some hard times because, say, the entire country is shut down. What we do know is that people need a place to live, and so for most people, paying their rent is a huge priority. Because shelter is one of those basic needs. We can also see from this COVID-19 pandemic that while the multifamily space was hit pretty hard, it wasn't hit as hard as other investment areas of real estate, such as commercial and single family homes. So that's the benefit to what is a pretty big risk when you do invest in a multifamily syndication. Number 2, aggressive underwriting. Now, sponsorship teams actually underwrite or look at the deal and take a variety of things into consideration before determining whether or not it's going to be a good investment and before they present it to you. The aggressiveness of an underwriting style varies from sponsor to sponsor and style to style, person to person, of course, like so many things. But there are a couple of key things that you can look out for that are red flags of a very aggressive underwriting style, which means that if things don't go exactly according to plan, you may be losing out on those returns. So those key things include a very low cash flow to return ratio. So if the property itself is not cash flowing, but they're telling you you're going to make a huge amount of money, you should be a little concerned. Of course, with value adds, it may take longer to get to the point where the property is cash flowing. For example, you may not see any cash flow in the first couple of years, but by years 3 and 4 of the hold time, you should be starting to see that cash flow begin to occur, and that should be in the underwriting model for you to see. Something else to look out for is a really low expense to income ratio. So they think their expenses are going to be very, very low, but their income is going to be very, very high. And a third thing to look out for is how they anticipate getting the rents that they're aiming to increase to. So this is something where you really have to know and trust your sponsor, or you ask them to show you the data to back up why they think they can get those rents. Because if they're saying they're going to take a property from $500 a month for a, say, studio up to $1,000 a month for that same studio, you want to know how they got to that number. And knowing that there are other areas and apartment complexes nearby will help to explain that change. And that leads us into the number 1 biggest risk of investing in a multifamily syndication, the sponsorship team. I know, it's hard to believe, but you are going to want somebody who has experience. You are going to want somebody who has knowledge. You're going to want somebody who has a track record. If they're partnering with others, you're going to want to know about those people as well, because you are investing your money and expecting them to do the very best for your investment so that you can get the best returns. In addition to that, you're going to want somebody that you are comfortable with their communication style, you are comfortable with their responsivity. So if you ask a question, you're comfortable with how long it takes them to get back to you. That's really important. And you're going to want somebody who basically gives you a really good, honest, trustworthy, hardworking vibe. And I can't quantify that for you, but if somebody is giving you kind of a knot in the pit of your stomach, be concerned, I guess is the best way to say that. So when you are looking for an investment opportunity and looking at a sponsor, you're going to want to take time to vet them. Definitely interview them. Ask for references. Ask for information on past investment opportunities so that you can see how their track record plays out. If you're talking to references, a really great question to ask is, what is their biggest weakness, right? Because if you know what their biggest weakness is, you can assess how comfortable you are with that. If there are other partners, definitely take the time to get to know who those partners are and what they're going to be responsible for so that you can invest with confidence because you know what the risks are and you've done your research and you're still confident that this sort of investment is the best fit for you. All right, I hope that was really helpful and not too earth-shattering. Drop us a comment below telling us what you think and any questions that you might have that we might not have answered today. Also, feel free to like this video or subscribe so that you can receive all of our awesome educational content, and we'll see you back here on another day and in another video helping you to become the savviest investors you can. Have a great day, you guys. Bye.